In today's video, I'm going to touch upon the AAPL stock, Apple stock, of course. Especially after the split, a lot of interest has been generated with the smaller investor community. As I speak on this video, the stock was down from its peak of like $127 around that to around 106.84. Not entirely unexpected, but certainly a little bit of disappointing when the smaller invested. Just when they jumped into that share, the stock went down. But I wanted to present some of the data and allow other investors to at least evaluate it and think about along the similar line, not necessarily following my line of thinking, but apply their own thinking. And I will start by going back to their annual sales number. And in 2016, that's the publicly available data that I pulled from finance.yahoo.com, and that is 215 billion. I'm right now not going through its profit, but because that could also be one of the factors that you will need to take into account. I'm not going through that. I'm just going by raw sales number, which is 215 billion 2016, then jumped up to 229 and 265 in 2018, and 2019 it's 200 back to 260 billion dollar. What it looks like to me that the brake has been applied starting 2018 with 265 billion dollar. It looks like the sales is approaching saturation, and as such the price growth should have moderated, or the stock price, assuming the stock price is in proportion to the increase in the sales or the profit, that should have but it did not happen, and the stock price kept going on. And let's go look at the most recent quarter sales number, $58 billion and $59 billion. It's expected, let's say the best case of next quarter sale of $70 billion, and the December quarters are usually the best quarter of $90 billion. If we take these best cases, then we have 90 plus 70 is 160, and 260 and plus another 15, $275 billion. It looks like in the best cases are also going to be not much above this $265 billion. So in theory, the stock prices should not have rocketed the way it was. If you look at the valuation is $1.88 trillion, which is significantly higher, and not long ago it was like $1 trillion, which was, to me, it looked like a fair value, not overpriced, not underpriced. To me, $1.88 trillion, and remember this is at $186 of the stock price. When it was like 127, it was above 2 trillion, like more than like $2.2 trillion. Now, if you ask me what are the chances of this valuation going from 2 trillion to 4 trillion or even 3 trillion, I will have to ask the question, what the chance that this $265 billion sale is going to be to double from here point. But before I answer this question, let me go to the valuation, and keep in mind that Apple has a lot of cash in its hands, so it's not going to go bankrupt. It's not going to be affected by minor fluctuation in its profit or sale over the quarter and quarter, because this $100 billion it can spend on at any time on any new project, new products, or so on and so forth. That could help it. So if I take this, because Apple is a very good brand, very known brand, very profitable, I will apply a 4x the sales, and the sales number I'm going to be a future good sale number, which is $300 billion. In the future couple of years it could easily achieve it if it's a little bit of aggressive. So $300 billion is not much off, being optimistic, but I could be wrong. It could be even better than $300 billion. In that case, I could be wrong about my assumption. And if I apply 4x the sale, that $300 billion multiplied by 4, it's $1.2 trillion, and add to this $100 billion of cash that it has. So it's $1.3 trillion is what, in my opinion, is a fair value. It's not overpriced, it's not underpriced. And if I apply that figure, then this 100 and even this 106 dollars of share price is looks to me a little bit of expensive. So I will have to say that the Apple stock could go as low as $25. It is waiting for one bad news for a quarter or this iPhone or this thing sales numbers to come in, and that's where it could go down to, and that's what where I would be looking for to jump in and actually buy those shares. Now, what you could do is, because I cannot predict when that can happen, and no, and it could possibly never go like at $75. So what you could do is be maybe buy this at this $106 or whatever price it is, but be prepared for the stock prices to go down all the way to $75, and in that case stagger down your buying price for like every $15 fall. For example, if you buy at $105, then you could buy next at $95 and next at $80 and things like that. So if you are investing like say $10,500 here, then be prepared to keep this much of money, 9,500 and 8,000 more, ready to buy more. If you do not have that much of money ready, then scale this buying in proportional. For example, just buy, instead of buying 100 shares, just buy 10 of these. You can buy 10 shares. Many broker account for this. For example, 100 and 1,050 here, $950 here, and $800 here. So that is one thing you can do. Don't think that it may not go down. Be prepared for it go down. But if it stays same, you get the dividend and a little bit of valuation, because it did touch $127, and there is no reason why it cannot touch that price again. But it may take time. You'll have to be patient. It can take a couple of years, 3 years or 4 years. So it may take time. But my personal valuation is that it could go down all the way to 75, and we should be prepared for that. I'm not talking about some of the more advanced things. And actually, if you want to hear about that, I would actually go to the put sale way, and I have covered it into the other videos as well. So in the put sale method, that's what I would do. I would go and sell the put, which means I'm ready to buy at $90 at this point. For example, I sell the put at October 15. Right now it's like September. I have this date wrong here, 9/19 today. So in the around October 15 put sale, I sell the put for $90, which means that I will buy the share if it goes to $90. But if it does not, then I collect the premium of $2 on those put sell. So on October 16th, if it gets to $90, I buy this Apple. If not, I keep the sales. But if it does get to $90, and let's say at $87, then I again do the put sell for $80, and then try to grab another 100 of these at $80. So the put sell strategy is even better. If not, you can buy some share and be prepared to buy at more down. But this is my overall strategy for Apple and my analysis of it. If you have any comment, just write it in the comment section, and I will be glad to reply. Thanks.